Hi friends, welcome back. So we'll continue with the bills receivable account. So previously we saw the debtors account. So we knew what is the impact of the debtors account. So we have an opening balance, how we do a credit sales, and then we make a collection of cash, we make collection of bank, we have discount, we have sales return, then we have bills receivable accepted and dishonored. So this is how your debtors account is over. The same way we will prepare the bills receivable account, and the bills receivable account obviously will again have a opening balance on the debit side because it is also an asset. So we have two balance, opening balance, and then if you remember in the debtors account on the credit side we had mentioned buy bills receivable. The same account we'll maintain over here. We are going to have sundry debtors account over here, and if there is going to be any dishonor we'll write buy sundry debtors. Okay, very simple. It's very easy because whatever you learned in the previous video, it's just an application of that. So you're going to have a opening balance on the debit side. This same bills receivable we wrote over there in debtors account on the credit side. Now we are going to write it on the debit side, and any dishonor is there we will write it on the credit side. And then you make any you received any money, it is going to uh, if you received any money in the form of cash or check, you'll write it as buy cash and buy bank, and then you are going to have dishonored. The balance should be dishonored mostly if the collection is not made, and then you arrive at the closing balance. So this is how your bills receivable account is going to get closed. So it's a very easy one when you do your debtors account. So bills receivable will be little more easier because we are going to just have a opening balance. You are going to have sundry debtors. You are going to make collection against the debtors, and then you are going to get the dishonored one, and you arrive at the closing balance of bills receivable. So quickly we'll do one problem so that we will get clarity on this. So illustration 12, if you see, uh, there is going to be opening bills receivable of 20,000, closing bills receivable of 30,000. You are going to have cash received and bills receivable dishonored. So simply we'll fill in the format of the bills receivable account because they have asked you to prepare the bills receivable account and compute the bills received from the debtors. So simply what we will do is we will prepare the bills receivable account. They have given the opening balance. So we will mention that opening balance 20,000, cash collected 60,000, by debtors, that is this bills receivable which have been dishonored, only that portion will write 5,000 over here, and they have given the closing balance which is 30,000. So obviously the balancing figure is going to be the total bills received during the year. So to debtors 75,000. So this is how you arrive at the bills receivable account, right? We'll do one more so that we arrive at the total sales. Now again I'm repeating, how do we arrive at the total sales? We simply find out the credit sales, we add the cash sales, and then we get the total sales. So over here we are going to prepare the bills receivable, okay, because they have asked you to prepare what. See, they have mentioned because here they have given the bills receivable opening and closing balances, and so you know how much bills have been received during the year, okay, and then you prepare your debtors account, and then finally you arrive at the total sales.